Previously, we have talked about credit fears in the market, liquidity crisis in the market. The SPY opened up with a gap down this morning, coming down to our target that we called out yesterday between 673.50 and 675.50. On multiple different time frames, you see a different outlook. We're going to talk about it. We're going to talk about the fear and greed index, what happened with the VIX, where this liquidity is going, where this market is heading, the earnings plays that we played, and then at the end of the video, I am also going to be giving you 2 earnings plays that I will be trading tonight, and we're talking about GameStop and AMC in this video as well. You're going to want to watch until the end, like the video, subscribe to the channel, turn post notifications on, and drop a comment down below if these videos are helping you guys navigate through these markets. So we originally called out volatility from the next 1 to 3 weeks towards the end of QT and possibly a government reopening. So we have this zone between late October to the 1st of December, basically the entire month of November, where we should see heightened volatility and bearish bias to the downside for some sort of correction, possibly coming into the end of QT. Now, there's a couple of scenarios that can happen and change things, and that is the government reopening. The government reopening, we don't know when that's going to happen, but people are predicting by December 1st that it will reopen. If that does happen and we do reopen, that, in my opinion, will likely be the spark for downside because we are going to get all of the data that has been left behind and hidden under the rug, and that data is probably not going to validate where the market is trading at. We also talked about the repo markets and how banks are not in the best spot and that they need liquidity. Liquidity is coming out of risk on assets right now, and we saw that with Bitcoin dumping all the way down to 102,000. We also said Bitcoin is coming towards 103 to 98K. Bitcoin's bleed off may not be done yet, along with the S&P 500. So with all of that out of the way, let's talk about where things are going. We indicated stealth selling in the SPY over the past few months, and I don't believe that stealth sellers have been selling for a 2.3% correction. These are average waves of the S&P 500, so there theoretically should be zero panic. We are only 2% down from all-time highs, yet the fear and greed index has jumped all the way down to extreme fear, sitting at a 25 out of 100, and the VIX has spiked up all the way, coming up to 20. I believe the danger zone is around 2350, where things get out of hand and we start to see some panic. Now, on other time frames for the S&P 500, other charts, here's what we see. First, we saw a gap down on the 4-hour. We broke below 2 support levels, coming all the way down to our box that we called out. So we have the first level being checked off. I would watch for a potential rejection at 681 today. If that doesn't happen, the SPY can come up towards 686 to possibly 688. Okay, that would be best case scenario. All-time highs I don't see being made within the first couple of weeks of November. We then see that we lost this aggressive uptrend sort of channel here, and we are coming up to test the bottom of it, which we could see a rejection right there at 681. That is the best case scenario for the bears, 681 rejection. We are currently at 679.85. Now on another time frame, on the weekly, we see the RSI tapping the overbought region on the 70 once again. We also see the MACD getting overheated right now, likely turning towards bear territory. If we bring the drawings in, we also see us trading above this macro ascending resistance. And we can see we're trading above this. Every time we have tested it, we have had massive corrections. We have not only tested it, but we are trading outside of these historical levels. A lot of people are saying we are in a bubble, and earnings don't technically justify that we are in a bubble, but liquidity restraints somewhat do. Somewhat are due for a temporary correction. So where could we see the market go from here? Well, realistically, I think a very healthy correction is going to be between 655 and 600. 655 and 600. That is a big region, okay? Don't get me wrong. That is a big region, but that is going to put us between 5-6% to 13% correction. And you guys know how quickly this year we have ran straight past the 5 and 600s right to almost 700. Okay, Bitcoin is not giving us any sign of strength just yet. And we also talked about how this one has been showing some selling as well. Big money needs liquidity. Banks need liquidity. This is being pulled out of things like Bitcoin as well as the S&P 500. What can change all of this? Even lottery stocks, you're saying there's only a bearish catalyst. It's the government shutdown. We're going to see volatility until the end of QT. But if the government shutdown is going to have bad data, isn't that going to just blunt the effect of the end of QT? Well, what is going to happen where this ends up being a bullish case scenario, a very quick reversal where short sellers begin to exit, is that a possible Fed intervention, which they love to do when markets begin to panic and there is stress on liquidity in the system. So if there's Fed intervention that is early, or if they begin turning the money printer on, or anything along the lines of that, we will have a very, very quick turnaround. But that will not be until people begin to panic. Now, we are at extreme fear, but I mean a panic in the markets and some sort of sell-off past 10%. We move on, and I want to talk about this very quickly. In the first 30 days of the shutdown, the US government borrowed an incremental $600 billion of debt, which is an average of $19 billion a day. And since the shutdown began on October 1st, over 3.2 million airline passengers have experienced cancellations or delays. If the shutdown persists through Thanksgiving, this number could exceed 10 million people. The US is now on track for a 61-day shutdown, which is 7.5 times longer than the average, all as the labor market crumbles and the Fed cuts rates amid a complete data blackout. The system is broken. We are not in a position where the market should be rallying to the degree it's rallying. We are not in a position where the market should be holding to the degree it's holding. And if the government does not open prior to Thanksgiving, which I believe it should, then we will lose even more money and stability. So what are we in? What are we in? A rock and a hard place? We are in, oh my God, the government needs to open before Thanksgiving or we're going to lose a lot more money, and the biggest travel day of the year is going to stump people from traveling. There's going to be a lot of issues, but if we open before then, that's great and all for Thanksgiving, the holiday, or the holiday season coming into Christmas too, but then we're going to get all the bad data. So what does that lead you to? Exactly what I've said, volatility with a bearish bias, okay? And I'll stand by that. MSTR has been falling off a cliff, and it broke below this support at 260, which flashes a major warning signal, even though we called out the warning signal once we broke below a couple of the EMAs. Now, I think MicroStrategy is going to continue to fall as Bitcoin heads towards 98K, potentially sub 240, potentially sub 220 on MicroStrategy. Now, Jim Cramer has raised his price target from 200 to 250 on Palantir. This was October 29th, and we all saw what happened with Palantir. The Palantir CEO Karp says the big short investor Michael Burry is batshit crazy for his big bet against Palantir. And you can see right here, the big short, or Michael Burry, has bet puts against Palantir and big names like Nvidia as well, and Pfizer. And we saw what happened with Palantir yesterday. It was down 10% on open this morning. And that is so beautiful. Why is that beautiful? That is because we played Palantir puts on the earnings in Discord. Another hit. Okay. We have had 3 for 4. We missed on HIMS, but let's take a look at what happened on HIMS this morning. We actually went down to where we were almost break even on the day this morning. And that is exactly when I closed those puts that we had on HIMS, taking only about a 20% loss or so on the HIMS puts, with a nice gain on the Palantir puts, as well as the overnight SPY puts that we were in as well. I have all of the receipts in here. SPY puts right here, November 8th, November 7th, 680. Then we had GameStop puts. I want to talk about this as well. There is only a couple of people that were mad about this, and this is going to lead us into GameStop's chart real quick, but I do want to say Mara earnings are tonight. I was initially bullish on Mara earnings. This isn't my most bullish play. I'm going to give you 2 that I'm actually indefinitely playing tonight at the end of the video, but Mara I am debating on. If I play it, it will be to the upside. Let's talk about GameStop. Somebody was pissed saying, oh, you're betting puts on AMC. Listen, I have been around since the beginning on this. I have not sold a single share. And I have been giving coverage to these companies time and time and time again. If you decide that you don't want to take money out of market makers' pockets because the system is rigged and then put it back into the companies that you want to thrive, then you're not doing justice. That's only if you are an options trader. If you specifically refuse to do it because these are the companies you're married to, which I understand. I understand diamond hands. I haven't sold anything and I've been covering it for years. But you need, personally, what I believe, I don't give financial advice. I'm not a financial advisor. I can't tell you what to buy, hold, or sell. But listen, if they're cheating in the system, I'm going to make money off of these people, and then I'm going to put it back into the companies that I want to thrive. It's plain and simple. There's nothing wrong with it. Some people truly grow up. I don't know what your. I'm going to cut it there because the video is probably too long. Short volume ratio on GameStop has just jumped to 500+%. A lot of these are being reported with third parties, so do your own diligence. Take it with a grain of salt, but GameStop's down another 1.36%. As this capital is being profited, this will carry back over into shares where we are trading damn near 100% of cash on hand. And what that means is that we have almost 100% cash on hand to buy back the entire float at this price around 21.80. I believe it's probably more so around like 21.20, and even still that's probably excluding the Bitcoin investment that the company has. Very undervalued. GameStop is so undervalued at these levels, and that's not to say that it's going to stop here. I think I have a bearish bias on the market. Overall, markets are in panic. There's liquidity stress, and we're going to see this flash down right towards a Fed intervention or some sort of catalyst, which leads you to a bottom right around November 20th, right? November 17th to November 24th or so. And then you come into December into quantitative easing and things squeeze and short sellers scramble, and I'll stand by that until something changes or we get some sort of catalyst. A catalyst can't be predicted, but what I can tell you, this is what I expect. Also, bang, beginning in December 3rd, perfect time for GameStop to report earnings. Such a beautiful play on GameStop's part here. AMC, let's talk about AMC. AMC is trading at 258, came all the way down to 250, almost all-time lows. This cycle pattern that we have been tracking indicates that AMC is right around its bottom, alongside GameStop. GameStop is pointing towards this bottom I said between November 20th, November 24th or so. AMC is pointing towards the same thing. We either see a bottom right now and we have a blowout earnings, which people can't predict, or we see the exact bottom when GameStop bottoms, right around November 24th before rallying higher. And this would be very fun. This will be very fun because a lot of people are betting on AMC's earnings, and I think it's at a scary spot because we either see a jump to $3, which you can see in this cycle period. Upon earnings, post earnings, we see a jump to $3, or we see a jump and a flash down, or we see a harder move down. That harder move down would likely take you towards 230 to 215, right? 230 to 215 on AMC. I would love to hear how you're playing this, if you're playing this. I am still debating on it. Earnings aren't until tomorrow night, so we'll leave that there. Or we could have, obviously, just with every earnings, it's all high risk. You can't predict an earnings. Or you could have basically theta decay. Nothing happens. Market makers profit off of zero movement. Then you sell off even further for playing calls. Come into November 21st to 24th. And then we get the pop and we start moving from there. Okay, these cycles don't have to play out exact, but most of the time they often repeat or come very close to it. Now, I would lean bearish bias. Why would I lean bearish bias? Well, we tested the all-time lows a lot, and the market sentiment is bearish, and GameStop sentiment is bearish for a very temporary amount of time. So I would lean bearish on AMC's earnings. Plus, Ethereum Classic, which AMC, Ethereum Classic track each other, had a very bad flush back here and still continues to show weakness with huge sell blocks, and the weakness is in the crypto space as a whole. I think risk on assets are going to get obliterated for another week or two. And then we see a spike. So ultimately leaning bearish bias on these earnings. Make America Great Again, the White House posted. The White House recently posted the reposted GameStop's post. Then you saw the Trump post shaking the Halo guy's hand. And then you saw Greg post the American flag recently. Now the White House is posting the American flag. There's a lot going on here. Let me know your tin in the comments down below. I'm going to try to read as many comments as possible. We have earnings tonight, more earnings tonight, and there's two that are really on my radar. Of course, there's a couple other ones like Mara or SMCI. Those are going to be interesting as well, or Axon. But the main two I'm paying attention to, AMD, the big boss right here, and Upstart, UPST. Upstart, I'll just leave it plain and simple, bullish. They have killed their earnings previously. The chart is looking good. It's looking pretty cooled off. Still have high risk to gap down towards 3150. But my main play is AMD. Don't know if I'm playing Upstart or Mara yet. AMD is already my first play, and I'm betting that it goes to the downside. This is a high risk bet. Every single earnings play is a YOLO. So if you're not ready to lose that amount of money, do not play these earnings. I don't give financial advice. I'm not a financial advisor. I assume you're paper trading or not listening to me. This is all my opinion. I'm just a guy on YouTube. Again, AMD has high expectations for their earnings. High expectations also in a weak market, given they have had some pretty good partnerships, but they are up 50% on the 1 month. The RSI is very overbought. Even on more macro timeframes, very, very, very overbought. I'm watching for a move down to 228 on AMD or 227 on AMD, aka the recent relative highs that it hit, the recent all-time highs that it hit back in February of 2024. We'll see what happens. I am risking a move to 320 on AMD, but with the recent performance it's had, I think a lot is priced in. Given something that's dangerous is it's a $415 billion market cap, where some of its competitors, of course, like Nvidia, are much higher. But obviously, that's for more fundamental analysis. Yada yada yada. I don't want to make this too long. Hopefully, you guys enjoyed watching or found value out of the video. So far, we have been on point with these markets. So let me know your thoughts in the comments down below. I love you all. God bless. Before I say lottery sucks out, I want you to subscribe if you're not subscribed. YouTube has been some unsubscribing people. And join my Discord server. It's the top link in the description of the video, where you can come talk with me, talk stocks and crypto with the most amazing people in their best vibes. And we have tons of trading alerts in there as well. Discord would likely pay for itself immediately. I also want to state, guys, for all the new people joining Discord, please, if you're not like tech savvy or something and you get in the Discord, do not respond to your DMs where people are impersonating me. That is not me. As soon as you join the Discord, I have a Beware of Scammers channel that you can read. People like to impersonate me, try to get information out of you or cash out of you, and it happens with other creators as well. I already know a few guys where they have had people give out their information. I'll never ask you your personal information. I'll never ask you for money or handouts or anything like that. No accounts or anything like that. And if we DM each other, I will publicly disclose it in the Stock Talk group chat, where all of the members are in talking stocks, and I will specifically at you. That is it. Make sure to join the Discord. Get these AI alerts. Get my trades as soon as I take them. Talk stocks and crypto with us. The best vibes, best family in there. And I have another link in the description for my custom indicator that you can add to your TradingView charts. I love you all. God bless. Lottery stocks out.